Morning, Steve Ray in Chicago with the morning grain comments. Yesterday we had a big rally in the stock market, big break in the U.S. dollar, following the Fed chairman remarks about getting neutral as far as interest rates are concerned. Overnight, grain markets a little bit easier. I think there's some consolidation from yesterday's rally going into this big weekend with the meeting in Argentina between the two presidents. You had headlines saying that China's hoping for positive results. You also had headlines suggesting that the U.S. needs to see some type of change in attitude as far as the Chinese are concerned before there's a deal. And we also noted that in China, they may start buying pork in its state reserves to support farmers struggling to sell their pig amid the African swine fever epidemic. So there's a lot of things going on here. I think the bottom line is that we've seen a 30-cent rally in soybeans coming into the weekend. The Brazil harvest is only start about 4 weeks away. The FOB basis in Brazil beans have dropped down to 80 over. They were at one time 250 over. We saw yesterday what would happen to the market if there is a deal. If there's no deal, U.S. soybean prices collapse, Brazil prices rally, and China crush margins drop. Over in the corn market, again, we continue to stay in this trading range, albeit lower end of the trading range. I think that there's some concern that people are getting a little disappointed that the corn market isn't rallying based on the fundamentals. Corn volatility will continue to increase. We need to see some kind of increase in demand. Yesterday, ethanol prices dropped to 13-year lows because of number one, the rally in corn prices, and number two, the drop in energy prices. Key is going to be what's going to be the 2019 supply. Nearby December corn at 360 could be value through the July 2019 contracts. In wheat, wheat prices still struggling near season lows. There's just too much wheat in the world. It was interesting yesterday that we were watching the Russian wheat prices trade lower. There is talk about Russia blocking as much as 35 Ukraine vessels from moving out of one of the ports. These are not a grain ports for Ukraine. Ukraine usually doesn't ship very much wheat this time of year, but that tension could provide some support underneath the wheat market. The key to the wheat market is whether we're going to see any U.S. export demand or lack of. And so far, big picture, 2019 Northern Hemisphere and Southern Hemisphere weather is okay. So there's no real problems yet. So we have to kind of watch and see how all that unfolds. Weather's still the most important factor in the grain markets as far as price discovery is concerned. Open interest continues to decline in corn, meal, oil, and wheat as we go into first notice day and deliveries. Funds yesterday, buyers of beans, meal, oil, corn, and wheat continue to be short about 50,000 beans, even in the corn, even in the meal, and short about 30,000 wheat. So again, we're just going to be kind of watching things to see what happens. You could see Monday or at least Sunday night grains sharply higher or sharply lower depending upon the results of any trade discussion between U.S. and China. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe